Today, we will talk about how to rebuild credit after bankruptcy. Let's have a look at the details. As most who have filed for bankruptcy at some point are aware, not only does it affect your finances, but it also does great damage to your credit score. Fortunately, rebuilding credit after bankruptcy is a possibility, and by establishing proper financial habits and both cautiously and responsibly taking on credit, it is possible to eventually attain a credit score of 700 or even 750. Having a good credit history will not only allow you to obtain credit, but also get better rates. The first step is establishing good financial habits. Commit to maintaining solid financial habits over time. The key to rebuilding credit is consistency over time. This means paying bills on time and meeting all credit obligations when they are due. Review your credit report. The journey to rebuilding credit begins by knowing exactly where you stand with regards to credit, and how far you need to go to get to the credit score you want. Typically anything over 700 is considered good, with 750 to 850 considered excellent. Conversely, anything under 640 is considered poor, with 400 or lower being very poor. Dispute any incorrect information on your credit report. It is not uncommon for incorrect information to appear on your credit report, or for there to be inconsistencies between reports by different bureaus. Create a budget. Bankruptcy can negatively affect your credit score for up to 10 years. Proper budgeting skills are the first step in building strong financial habits that will not only help you rebuild credit, but also help you maintain good credit going forward and prevent financial hardship. Create savings in your budget and reduce non-essential expenses. Once you know how much you make and how much you spend, it is important to reduce non-essential expenses as much as possible. Pay your bills on time. Once your budget is created, you will have a clear image of what your expenses are. It is important to prioritize your expenses so that all bills are paid exactly when they are due. Payment history makes up 35% of your credit score, and on-time repayments can quickly and easily rebuild your credit score. Build a small cushion in savings. Every month, it is important to put a little bit away in savings. Although 5 to 10% is recommended, saving anything is positive. Having emergency savings allows you to forego using credit if there is a sudden bill that emerges. The second step is applying for credit. Open a new checking and savings account. If you do not already have both a checking and a savings account, open one of each at a local bank or credit union. Get a secured credit card. Unlike a debit card that directly draws money from your bank account, a credit card allows you to borrow money and pay it over time. This is the easiest way to start rebuilding credit. A secured credit card involves giving the bank money, and then the bank gives you credit in that amount. Get a retail or gas credit card. Pay off your balance every month. You might have heard that carrying a balance is great for your credit score, but that's not necessarily true. Avoid closing accounts. Avoid finance companies. Remember, finance companies exist to make a profit. Ask when you can upgrade to an unsecured card. If you've successfully managed a secured card for more than 12 months, consider asking your bank if you can switch over to an unsecured card. Most banks will agree to letting you have a low-limit unsecured card after 12 to 24 months. Thanks for watching this video. Please don't forget to like and subscribe to our channel if you like our videos.